In today's video, I'll be getting into a bunch of really great looking trade ideas in some really top companies. I'll also get into all of the major US indexes. I'll be guiding you through all of the key price levels and the key charts, and I'll also be getting into volatility. If you picked up my video last month, the numbers speak for themselves, so I really hope you did very well. I'm a verified and transparent Tier 1 professional analyst and former Deloitte hostage, so I'm sure you'll get a ton of value from today's video that you just won't find anywhere else. And as always, I hope the Scottish accent isn't too difficult. If you've followed the channel a while, you know the drill. Please do smash the like button. If you're new to the channel, please do consider subscribing and also following on social media. But let's start off with the S&P 500. We are now breaking out to new all-time highs after the recent corrective phase that we've all had to deal with. I think there's a lot of bewilderment, especially with the conversations I'm having about why we're now at all-time highs, despite a lot of the geopolitical carnage that I think we're all seeing across the world. The market is now, in my view, starting to look 6 months down the line. So I think the news that obviously affected the market a month ago, the market already starts to kind of look forward and starts to kind of project what the views are. The market is telling us what is likely to happen over in the Middle East, if that is still factoring into your decision making at the moment. So we are now going out at new all-time highs in the S&P 500. The chart, whilst is using technical analysis, there is supportive breadth data as well. We're seeing a big expansion of stocks moving higher. I'm sure we're all seeing it in our portfolios. There's a lot of stocks that have been beaten down that are now starting to rapidly move to the upside, which for me, as a long-only analyst and investor, I'm very, very happy about that. So the big question is, what are the upside targets on this breakout to new all-time highs? Now, obviously this is a multi-year outlook. This could be 2-3 years down the line, but the chart is utilizing Fibonacci levels. The reason I'm using Fibonacci levels is historically we can see the chart does respect these Fibonacci levels. So provided this breakout sticks the landing, I'm hopeful. Yes, we'll need to deal with corrections along the way, as we do every single year. But the target that I'm working with for the S&P 500 is 10,000. That obviously with the ETF is up at 1,000. So we'll need to see how that progresses. But something I just wanted to touch on, if you missed the analysis last month, when we get these corrective phases, I understand that there's a lot of negativity. It's very, very difficult, I think, in the moment to identify these areas where you should, in theory, start to kind of look for buying opportunities. Now, for me, the kind of mid-term view, this is a chart dating back to the last 6 years. I only use tools on my charts provided that I can see they have historical significance. In this case, when we get these corrective phases, the 50-week moving average is generally a decent level to start to nibble a little bit. Just look at the performance of some of the selections picked out last month, you'll understand what I mean. But the S&P is going out at new all-time highs, and I think the big question I think a lot of folks have is what could potentially be a defensive catalyst. Now, for me, with the big move that we've had off the recent lows, triple Qs up nearly 17%, micro caps, S&P 500 up nearly 12%, small caps up 14%. It has really been a historical rally. We're seeing the triple Qs also make new all-time highs. But what would have me questioning my bullish thesis is if we start to see the US dollar make moves to the upside. As the chart here shows, there is a very clear inverse correlation between the US dollar index and the S&P 500. Now, this is a chart, I've tried to kind of present it in a way that just makes sense. So if the dollar starts going up, stands to reason that the S&P 500 would start to go down. I don't think we're in that environment at all. So for me, it just makes a lot more sense to look for the areas of the market that are moving higher. Now, semiconductors have been a massive component of my work over the course of the last month. We again breaking out to new all-time highs, Fibonacci levels. We do have some big upside targets that we have been working with. Yes, we're going to have to deal with the inevitable pullback. What that pullback looks like, we'll just need to observe it. But the longer term structure of the chart for me brings into play targets up around 600. Yes, of course, we'll get that 5% pullback absolutely at some point. But for me, provided that the US dollar index is playing ball, I would view any dips in semiconductors as massive opportunity. The Dow Jones Industrial Average is still range bound. I would like to see the Dow break out to new all-time highs just to kind of give that added confirmation that we are dealing with, hopefully, the start of the next bull leg higher. The Russell 2000, the risky small cap names, are also breaking out to new all-time highs. Again, do have some lofty upside targets there that I'm working with that have been for quite some time. So hopefully there's still another 20% upside there in the Russell 2000. It's the same kind of look to it with the micro caps. So again, if the risky stocks have not been on your radar, there's a lot of alpha to be generated in our view over the next few months. Again, the caveat is that these breakouts to new all-time highs all stick their landing. If the breakouts simultaneously fail together, then that's obviously a risk management mode. But for the time being, I am viewing the move higher that we've had over the last month as a very, very positive development for the market. And the hope is that we do start to take the next leg higher. The S&P 500 Volatility Index, the VIX, again, is still in the buy stock zone. When you start to kind of get these big spikes in the VIX, inevitably it tails off again. We're not even close to complacency at the moment. No doubt, I'll see it all over social media this weekend with the stock market at new all-time highs, that there's a lot of bearish sentiment. I don't understand why that is. There's a time to be bullish, there's a time to be bearish, defensive, etc. So for me, at this moment in time, I'm viewing everything through the lens of a bullish perspective. Now, I am about to walk through around 20 individual stocks to add to your watch lists for the month of May, but if you're still here, tells me that you're getting a lot of value, so please do smash the like button. But something I want to just add in this month is, if there are any stocks on your radar that you'd like me to take a look at for next month, just drop them in the comments. I'll take a look when I post my next video in a few weeks' time. I'll have a look at some of the charts and start to engage more with my YouTube community and to provide more charts that you guys are requesting. So drop me a comment, let me know why your stock is on your radar, let me know the ticker symbol, and I'll take a look at it for next month. But some charts that I just want to walk through for the next few weeks. We have ARM Holdings. Now, ARM Holdings is obviously in the semiconductor space. It's been absolutely ripping higher over the last few weeks. Now, for me, it's obviously a very, very choppy natured chart. It has been for a few years, but we are now breaking out above the prior cycle highs from July 2024, and we are moving into earnings season. So we have earnings coming up for ARM next week. There's a lot of bullish catalysts in our view for ARM. It's been top for performer for us. I think I was having a look at the semiconductor data earlier in the week, and I think ARM is the second or third top performing component of SMH so far this year. So I'm very, very pleased with ARM. The hope is that it will continue to move higher. So the targets that we are working with, utilising Fibonacci levels, of course, 255 and 364. But the way that I'm kind of viewing the semiconductor space at the moment, I think there's a lot of folks that are, betting heavy on NVIDIA. A lot of my work is actually focused on trying to find the next big mover, the next NVIDIA. Obviously, I've got a lot of clients that want me to pick out bottoms for NVIDIA. That's great. There's no problem with that. But for me, I find it more interesting actually going down the market cap scale. $5 trillion market cap for NVIDIA. How much higher can it really go? Maybe another 100%. Whereas when you look at stocks like ARM, for example, that are $200 billion market cap, where's the alpha going to be generated? In our view, since the start of the year, it's actually been in stocks like ARM, despite NVIDIA testing those previous all-time highs. If it does break out to new all-time highs, of course, very, very bullish for the market in general, in our view. If it does break out, there are some lofty upside targets to aim for there, up around 320. But like I said, I'm more focused on lower down the cap scale. AMD has been another massive performer. We have earnings coming up next week. The targets that we have with this one are up around 400, and hopefully by the end of the year we can start to move towards that 650 level. But of course, earnings need to play ball. If we start to kind of get into the scenario where they start missing on all their metrics, blindsided news, etc., then it's going to be more of a rocky road higher. But in our view, stocks like ARM, like AMD, they've been no-brainers in the last couple of months. So the hope is for us that they will continue to move higher. We've also got Amazon. Now, Amazon, earnings out the way. From my perspective, earnings look great. The market hasn't sold off, so very, very happy with that. Breaking out to new all-time highs, and the hope is the target that we're working with there is up around 340 for Amazon. Now, something also as well that I wanted to bring into focus here is CoreWeave. Now, CoreWeave, again, it's got a lot of hype around it. The targets and the levels that we're working with here are around $125. Again, we have earnings coming up next week for CoreWeave, so we'll need to kind of wait and see what the earnings look like. If the earnings are positive and we start to kind of see that move higher, then I think targets up there around 187 would make a lot of sense for us. Now, TeraWulf, again, very, very strong performer so far this year. In our view, it's been breaking out over the last few weeks. Very, very happy with it. Again, we've got earnings coming up in 10 days, but for me, that's breaking out of a 6-month base. And the hope is that this level up around 43, 44 will come into play. The downside with stocks like TeraWulf is during earnings season, the correlated stocks that are also reporting will no doubt move the market for TeraWulf as well. So if you're looking at Iron Limited, for example, when they report earnings, if they don't meet, then stocks like TeraWulf, etc., will also take a little bit of a hit. So there's a lot of shenanigans to navigate over the next couple of weeks. But provided that we stay above these levels around 17, then I think it's still fair game to the long side. A stock that I covered last month was Microsoft as a tradable market low. Very, very happy with how it's performed. We've had earnings now out the way. And in our view, it's now starting to consolidate nicely in this tight little range. And the hope is that it will break out of this range over the course of the next few weeks, hopefully sometime in May. And of course, if it does break out, then the hope is that it will just continue to move higher and move through the levels back to those previous highs. But there's obviously a lot of shenanigans with OpenAI at the moment. The market just doesn't like anything that's remotely been aligned with OpenAI over the course of the last few months. But the hope is, in our view, that Microsoft has bottomed and it is now starting to take the next leg higher. Another one that we like a lot is Dell. Now, Dell has broken out of a massive 2-year cup and handle pattern. I did cover this chart again last month. So just to reiterate for you, the levels that we're working with here, up around 250 would be target one. But again, we'll need to see how earnings react to this one. I believe they report early in May as well. Palantir, no doubt there will be a lot of shenanigans, I think, with Palantir over the next week to 10 days. It is testing a very, very big support level now. If you are new to the channel, Palantir was a stock that I started covering, I believe, around $20 a couple of years ago, and it just went on an absolute monster run. Since then, it's just been kind of consolidating. It's actually not been on my radar. I said thank you very much to this nearly a year ago. I've been very, very happy with that decision. But it's testing a big support level here. So I'm hoping to see this level hold, just in general for the market as well for Palantir. I know it's a bit of a cult stock, and this level here, around 125, as long as we hold above that 125 level on the back of earnings, I think you can still remain bullish on it. Cisco Systems is breaking out above those highs from the dot-com crash. It's been a long road for Cisco shareholders that maybe did buy the highs back in 2000. Yeah, it's breaking out to new all-time highs, provided the breakout sticks a landing here and we stay above 82. And the targets that we're working with there are around 127, 128. Now, Coinbase, if you're not paying attention to what's happening with the Bitcoin chart at the moment, again, Bitcoin chart's looking very, very similar to Coinbase. So if Bitcoin has bottomed, it stands to reason that you can start to kind of look at stocks like Coinbase. Last month I did actually put out a massive bottom call on Strategy, which I think is up around 60-70% off its lows. But in our view, Coinbase is hopefully basing a little bit here. This is the chart that our clients have. Some of them have been nibbling around 145, but if you're more of a breakout trader, then perhaps a breakout above that 220 level, it might make some sense if you like Coinbase. Now, another one to look at here is HIMS. Again, HIMS potentially is gearing up for a tradable bottom. It's a very controversial stock. It's incredibly volatile as well. But one of the things that I am looking at here with HIMS is the massive 30% short interest. If this does get a little bit squeezy, then there is, in our view, a bit of an opportunity to be had. On this breakdown here, I definitely did not see this putting in any kind of reversal. But here we are, and as long as we're above those prior cycle highs from 2021, then I think HIMS is fair game to the long side. Now, a stock that has been beaten up a little bit this year, one that I'm looking at here, potential tradable low, is for Nutanix. Now, pretty self-explanatory chart, isn't it? One of the things that I look for tradable bottoms, I'm not a big fan of buying and just dollar cost averaging. When I'm looking for tradable market bottoms, I much prefer using technical analysis and looking for these base bottoms. It just makes it a lot easier. It just tells me, this might be a stock to buy now, and $45 is the level there that we're working with. Another one is Seadrill, which just continues to move higher. It's just been a slow and steady wins the race type of stock over the last few months. We're working with previous all-time highs there, up around $56. That's the level that we ultimately hope to hit. CF Industries has broken out above key Fibonacci levels dating back to the 2018 declines. It's a stock that's more in your farming, agriculture, chemical space. And again, as long as we're above these levels from 2022, then again, I think it's fair game to the long side. That said, it's a top performer this year. I was having a look earlier. I think it was up around 40-50% this year, which is terrific. But it has been consolidating over the last couple of months, and hopefully, potentially, if it can catch another meaningful bid, then big upside targets are to be had. Speaking of big upside targets, Tower Semiconductors, again, if it's not on your radar, very similar to Palantir. I've been covering this on the channel pretty much every month for the last year, and it just keeps continuing to motor through the levels. Again, it's broken out above its next Fibonacci level, and again, talking about the cap scale, we're only looking at a $25 billion market cap here, so potentially this could be one to keep an eye on. Obviously, big upside targets. Already made a monster move over the last 12 months, but the hope is that it can take another leg higher. Iridium Communications, again, another one that's been an unbelievable performer this year. Very, very happy with it. We've just had earnings now out of the way. It is holding on to its 5-week moving average. It has broken out again. So again, I think there's a level here around $44. Potentially that could be a breakout level. But ultimately the targets that we're working with there are up around 67. But we are, I must stress, using the 5-week moving average as a risk management tool. Our clients got this at $20, and it's still holding up absolutely fine at the moment. Excuse me. Now Target, again, consolidating nicely over the last few weeks. It has had a big move already this year. It is outperforming the market quite considerably. We have earnings coming up on May the 19th, but if there's a breakout there above that 134 level, we are still working with targets there up around 145. We've got Valero Energy. Again, might not be a name that many of you are familiar with, but again, it's consolidating nicely over the last couple of months. It is range bound. I don't mind sideways moving stocks in uptrends because when they do break out and take the next leg higher, quite often it can be explosive. And if it can break out there above that kind of 260 level, then again, I think that might offer investors another opportunity to get in for the next leg higher. We've also got Open Door Technologies. Again, very, very controversial stock. This is actually a stock that I owned. I got rid of it a few months ago. I got shaken out on this long, prolonged mess. Jane Street doing Jane Street things. But I am watching this very, very closely with earnings coming up next week. I think if we can get a close above the 200-day moving average and break out of that base, then potentially there could be some kind of momentum that comes in there for Open Door. I know it's a very popular stock, especially with retail investors, and I'm watching it as well. We've got Strategy. Now, I did say a few minutes ago that I put out a big bottom call on this one a couple of months ago. It's doing its thing. It's up nearly 70% off its lows. But these are the levels that I think make a lot of sense if you're a trader. 195. I think if you are looking at MicroStrategy, I think if it can get a breakout above that 195 level, then again, I think it's fair game to the long side as well. We also have Targa Resources. Again, it's an under the radar name, but it is very, very strong stock. Lots of solid fundamentals behind it. If it can get a move above that kind of 260 level, I think, then again, there's some big upside targets to aim for. This is actually a stock that I brought onto the radar of our clients a few years ago, and it just made an absolute monster move. So it is capable of doing big things. So again, I think it's definitely worth adding to your watch lists for the month of May. But if you're still here and you're wondering who it is I am and what it is I do, there's a link in the description for our website at honeystocks.com. If you'd like daily access to a professional tier 1 analyst with a top track record, I'd encourage you to check out all of our transparent, time-stamped work on our website. If you are a trader, an investor, a money manager or a financial advisor, my work is likely a good fit for you. We provide memberships to all of our premium work, which includes our complete market breakdown and trade ideas that go out every single weekend, all of our highest conviction investment ideas. I'll show you what that looks like in just a little second. Our bite-sized midweek halftime report updates and a few more trade ideas. You'll also have access to a wonderful, intelligent community of professionals, investors, and traders from all across the world. You have complete access to all of our chart books, which includes all of our trade ideas, ETFs, and commodities. And if you're new to technical analysis, you also have access to our complete technical analysis program, which will show you how to read the stock market and also build a process that's unique to you so that you can stand on your own 2 feet. Now, to show you what our time-stamped highest conviction ideas look like, here's a few of our very recent ideas that have gone out to our clients and members over the last few months. As you can see, the charts are very clear, very easy to understand, have very simple instructions on how you can approach our best ideas. But I am very unique in what I do. I publish on our website the performance of every single one of our highest conviction best ideas that has gone out to our clients since 2018. So if you are considering accessing our work, please do make sure the types of ideas that I generate are the types of ideas that you like to buy. It's always high quality stocks with very solid fundamentals, and there is a risk to reward proposition as well. I think generally my work is a good fit if you have a mid-term approach, if you're looking, a few weeks to a few months out. I think if you're someone who keeps getting shaken out by market news, making impulsive decisions at market tops, market bottoms, etc. If you keep getting confused by all the different market analyst opinions, if you're maybe too busy with work, life, business, etc. to find the best stocks and the best charts, then maybe my work is a good fit if you do want to be part of a community and you're sick of hunting around social media. So if you have stuck here to the end, as always, thank you very much for watching, and I hope to welcome you soon. Thanks very much.